And now what they do, they push the price down again by selling paper silver. This game can't go on much longer. But this is a great example. It's a great playbook for what can happen to silver, and I think what will happen to silver. So the problem hasn't been solved.
Right.
They just try to scare the market.
Right. I saw your talk with Max Kaiser where he said you are the Oracle of Amsterdam because a lot of what you spoke about has come to fruition. So I want to talk about that. Silver squeeze. We saw what it did to the price, what the people did to the price. A lot of precious metals investors were celebrating, saying, finally, this is exposing the ugly underbelly of Wall Street. While there's another camp that's saying, hey, the silver squeeze is not real. Don't go long silver because you're just going to be putting more money in the pockets of these hedge funds. So how do you see it, Willem? Why hasn't that moved the price of silver to at least $35, $40 an ounce? Where are they getting the supply for silver? Are they getting the supply of silver? I guess
that's the big question. That's the
question, right?
But most people think that the pricing mechanism for a metal is the physical supply and demand. That's not true. The physical trade is only 1 or 2% of the trade. Most of the trade is done on futures market. That's the paper selling. So if you sell enough silver on paper, you can bring the price down. That's what just happened again in the last few days. The SLV needs to source its metal. And there's another great ETF, that's the Sprott ETF, the PSLV. And the PSLV, if you study the history, it has been quite clear, and Eric Sprott has been very vocal about this, that it could take months for them to get enough silver delivered. I think within the SLV, some tricks are being played because the amount of silver they need to fund now, it's physically almost impossible to get that many extra ounces of silver within a short time frame. So you see all kinds of leasing constructions, and I don't know the technical details, but this game can't go on much longer. There's one great example which actually tells you how this will play out, and that's palladium. Palladium is a very small market, just like silver. Palladium was managed, manipulated for years, just like silver, just like gold, just like platinum. If you look at the concentrated short positions, palladium was among the largest position relative to the size of the market for years. Then the physical demand became so large that it overwhelmed the paper shorts. This happened in 2017, 2018. The paper shorts, they had to deliver physical palladium, and they couldn't do that for that price. So palladium went through the roof. The palladium price went up fourfold, and the palladium shorts decreased their position until they were, well, relatively normal. The price of palladium went up 4x between 2017 and 2020, and this was due to the fact that in the car industry there was a shift, combustion engine vehicles towards the hybrids, and in the hybrids you need palladium for the exhaust system. And this is all a little technical, but it resulted in a huge shift in the market, that there was more palladium needed in the exhaust systems than platinum, and that caused a squeeze in the market, a physical squeeze, and that's why the shorters, they really had a problem. This was all 3 years ago, so before Corona. If you look to the situation nowadays, still concentrated short position in silver and in gold, especially in silver, and the physical demand will overwhelm them now. That's the big risk, and that's why there's an emergency meeting called by Janet Yellen, and the CFTC is joining that meeting because I think they have a big problem on their hand, and they've been able to manage this market for decades, and I'm afraid that the palladium scenario will now be unfolding. But this is a great example. It's a great playbook for what can happen to silver, and I think what will happen to silver, because central banks can solve each and every crisis, but they can't print silver like they couldn't print palladium.
Yeah.
And that's very, very risky for financial system as a whole, because palladium doesn't play a role in the financial system. And silver is not playing a role in the financial system. But if silver breaks, then the gold manipulation might break as well. And then you have a real crisis within the international monetary system, because then the dollar system is at risk. And that's what my book is all about.
Okay, so for you, the silver squeeze is real.
Oh, yeah. And just to start.
Because, many are thinking, okay, it's over. Silver had its run up. We saw what it did to silver miners, but the next day we're back down.
Yeah, but the physical demand is still out there.
Right.
And try to buy any silver in size or even small quantities is not available. And now what they're doing, they push the price down again by selling paper silver. So the paper shorts is increasing. But the lower the price goes, the more physical demand there is out there. So the problem hasn't been solved.
Right.
They just try to scare the market.
When you're saying they're scaring the market, is it the banks? Is it the hedge funds? Who are you talking about?
It's the billion banks who have been working as a cartel for decades, because gold and silver are the anti-dollar. The dollar used to be backed by gold, but in August 71, President Nixon, he closed the gold window. So since 1971, gold and silver are the enemy of the dollar. And of course, the US wants to support the dollar system for as long as possible. So if they let silver and gold go much higher, that's a huge risk for the dollar system. And since Corona, the money printing has started to become so insane. Over 25% of all dollars created were created in the last 12 months, that more and more people are starting to begin to understand what's the problem in this system. And especially the younger generation, the Reddits, they are getting the message now, and they are spreading the message. So I don't have to do it anymore. There's the younger generation who takes over.
Do you only buy physical silver then? Would you not touch paper silver?
I'm sitting here in our office. I'm the fund manager of the Commodity Discovery Fund. Here we invest in silver equities. That's 10% of our portfolio. We also invest in gold equities and other commodities. I'm also a private investor, and I had a bullion web shop years ago. I sold a bullion web shop, so I know the thing about the physical business. Privately, I'm still an investor. I buy physical gold and silver and store it, because I know the prices, especially for silver, will have to rise significantly. And just like what happened with the palladium price.